So yeah, anyway, today I have decided to discuss a very unique topic on agriculture finance and corporation, and that topic I'll let you know. I'll share with you. So now I am just sharing that thing with that topic is very unique that I'm sharing with you, and you just please wait for that the under the that is very important, that topic I am sharing with you. And through this topic we'll have understanding about the credit classification, financial planning, and agro based industries. That to be discussed over here. And this topic is very important, and the objectives, they are very clear, that objective, that concept of credit, will discuss element of important of 6 P's in financial planning, agro based industries, and the constraint in between. So these are the objective. Through this we will discuss the entire thing, that we'll have a discussion on that. And then through this discussion we'll have a discussion that what kind of that thing is there. So these are the important. So good morning, friend. I have decided to discuss today a very vital topic of the any business management, that is credit. And and this is for your better understanding, that credit and 6 P's of planning we'll discuss today. It means here we will have we will have decided to discuss the credit and 6 P's of credit. The objective of learning of this concept of credit is that key element, and the concept of credit, and then the key element of 6 P's of credit. So first, let us have a relook on that. Credit is a Latin word, means credo. I believe. Credo means I believe. It means it's a matter of that the belief. If you have belief, you have a degree of that credibility of that personality in your mind. So that hence the credit is based upon belief, faith, and confidence, and trust. So by and large, all these four, they look like the synonymous to each other. So credit or loan is a certain amount of money provided for certain purpose on certain condition with some interest, which can be repaid by soon or later. It means credit is a loan, and it's a certain amount. It's a certain amount of that money to be given in the form of the loan, and the purpose was explained by the loanee, and the conditions explained by the creditor, and then both have the common understanding, and this was to be taken and given on some interest, which can be repaid as per the terms and conditions of the understanding, as per the conditions of the understanding. So credit is a temporary transfer of assets. Credit is a temporary transfer of assets from one to another, or we can say that the one to another who has not. It means that if somebody is not having that assets, or because it's assets for the person who's giving the credit, and it's become the liability for the person who is taking the credit. So that is the relationship. This was duly expressed by the Galbraith, by the Professor Galbraith. And the credit is nothing. It is just the uh, just the uh, just the confidence, belief, faith, and the trust. It's a combination of all four, and they are being treated as a synonymous in this particular concept of credit. Now the credit is having the 5 C's. Now the credit is having the 5 C's. Under the category of that, the 5 C's, credit has been subdivided. For example, the worthiness of the credit worthiness of potential borrower is to be decided under these five categories. Under these five categories, if a person is qualifying under these five categories, then we can say that the person is credit worthy. It means the same treatment to be given to the to the financial institutions of any organization if they are having these five C's, and they are possessing the characteristics of these five C's. So number one, the C out of these five is the character. It means that the person who is having the good characteristics, that person can be can be trusted, can be express our faith. So that's why the person, if he is having a strong characteristics, it means whatever he says, whatever he commit, he is in accordance to that. So and his behavior was in accordance to the the statement which he gives in general, either in writing or in oral. So that kind of that characteristics of, if a person or if a firm is having, that to be treated as a as a that as a first qualification of for the credit. Then the capacity, the second one is the capacity. It means whatever the firm or the individual, what kind of that capacity he is having. It means how much that the income and how much that the assets he is having with him. So that kind of what kind of the capacity he is having, this is the second parameter of the credit. Then the third one is the capital. Capital is very important, that on the basis of that, if a person is having, if a firm or if the organization is having fixed capital, then we can mortgage that capital. So in that case, if the capital, number of capital, the amount of capital is higher, that firm or that individual being treated as a good and faithful and the credible person, we can consider him, and that on the basis of that, the financial institution, they provide the loan. Then the fourth one is the common sense. It means the person who's because the credit when given, it means the both creditor and debitor both have the same understanding on the condition of the loan, and they have the same. It means they have the commonalities. There is no differences. It means at a quantum of time when the loan was signed and loan was given to the person or to the firm, it means whatever the signing conditions are there, they have the common understanding of that. So that is also very important. Common sense is also very important. Then the conditions, at what conditions the loan to be given, either it's a short term loan or long term loan, at what interest rate, in what way they have to repay the loan. So that these are all together, these five C's, they are to be considered as a important tool for assigning the credit. And now we will discuss these five C's once again, one by one, and that I have already explained you the characteristics. So let us have a first look on the characteristics. That the sometimes called credit history, the first C refers to the borrower's reputation or track record. So character is nothing. That the first one, the characteristics is nothing. It is the borrower's record. We'll go through that's why whenever a financial institutions, they issue the credit to any individual or any firm or any organization, then they ask two three documents, that last 3 years their income tax return portfolio, then the balance sheet of last 3 years if the firm is there, and if will and the bank statement, and the bank statement of the concerned or of the concerned firm or the concerned fellow. So character is very important. On the basis of that, if there is check bouncing in the banking, then we can treat that person not a good, not having a good characteristics as far as the business is concerned. So these are few things, they are very important, that when we have something like that, then we have to understood this thing. So these are the few important things. Those who are to be considered as a credit assigning parameters. Then the capacity of the individual. Then the capacity of the individual, that we have to also understood very well. Then the capital, then common sense, then the conditions. So all these are the important parameters of selecting the person for judging the worthiness of the person. So that on the basis of that we can decide that the person is worthy, and we can issue the credit against that party or that firm. Then the capital, that I have already discussed, that in what kind of that institution he is having, what kind of assets he is having, the fixed assets or the variable assets. Then the commonalities and common sense, which is also very much important, that how much that he is having to understand the things in which way he want to understand. So that kind of the common understanding to be there at a quantum time when they are signing the document. Then the condition of the person is also very important. The health of the individual or firm, in what way he is behaving. So that kind of that all the things, the condition of loan is also to be discussed clearly, that it's a short term loan, long term loan, or likewise that the business loan or car loan or home loan. So these all are the conditions of the different loan, and on the basis of that to be decided, the credit amount to be decided to the person who's interested in taking the credit. So anyway, thank you very much. So this is the important thing which is to be decided further. So, good evening, students. Today, I have decided to discuss a very important and vital topic from agriculture finance and cooperation. This is a subject of finance, and this came under the agriculture economics. That topic of the day is credit and 6 P's of planning. The learning outcome of this discussion about credit and the 6 P's, that to understand the concept of credit, and that we will understood completely after that the discussion will over. Then the key element and importance of 6 P's, that we'll also discuss in this particular topic. So first let us have a discussion on that Latin word credo, means I believe. Hence credit is based upon belief, faith, confidence, and trust. It means the credit is nothing, it is just the combination of belief, faith, confidence, and trust. These all are all four words, they all together. When we find in some agency or in some people, then we can say that he is a credible person. Then credit or loan is a certain amount of money provided for certain purpose on certain conditions with in some interest which can be repaid by soon or later. That it means they all are the conditions actually at for what period, how much amount we have given, that all to be taken into the consideration while we are giving credit to somebody else. Credit or loan is a certain amount of money provided for certain purpose on certain conditions with some interest can be repaid soon or later. That's why we know that the credit, sometimes we say that the short term credit, long term credit, and the medium term. So, for example, the short term credit is just for car loan or like that, 3 4 years. Sometimes even the 1 year also. So like that. But the medium term is like that. We are giving the credit to certain that startup for 5 years, 10 years like that. And the long term is above 15 years like that. We are giving housing loan or like that. So these are all are the category of the credit or loan. Then the credit is temporary transfer of assets. Now we conclude that credit is temporary transfer of asset from one to another who has not. It means it's a financial transaction. It's a pure financial transaction of assets, financial assets. It means the money we are transferring from one to another who is not having or but who is requiring for certain purpose. So that transaction is being known as a known as a credit. Credit is temporary transfer of assets from one to another who has not. So by this is the definition of Galbraith, and by this now we have a very much clarity that credit is nothing. It is just amount or the money which is being given to or which is being transferred to the person who is not having that, but he is requiring for a certain purpose, for certain growth, for achieving certain growth in his business, for certain for education. If we are giving the credit for in agriculture, we are giving the credit for seed or like that. We have we are providing that credit to KCC Kisan Credit Card, or there are served through NABARD or like that. So these all are the things by which way we are providing credit to the people. It means here the transfer of money in this way or that way on a certain conditions. That is the basic theme of the credit. Now the 5C of credit. The 5C of credit is a system used by lenders to gauge the credit worthiness of a potential borrower. This is very important, that how much amount to be transferred to a particular organization or to a particular individual or to a particular group of individuals. So this is the what is the criteria actually? That criteria is being known as a credit worthiness. That criteria being known as a credit worthiness. So on the basis of that, the financial institution they issue the credit. It means they are issuing their product, whom we are calling money, that they are issuing in the interest of the others on a certain conditions. But what are the criteria? That criteria is being called as a credit worthiness of potential borrower. That the borrower is there, but he required money. But what kind of that credit worthiness is there? That all the things they are to be taken into the consideration while a financial institution issuing the credit. The system weighs 5 characteristics of borrower. What are the credit worthiness that characteristics? They are five, and on to whom we are calling the 5 C's. It means the credit is nothing; it is just the combination of 5 C's. If we assess the organization or person through these 5 C's, then only we can have the idea that what kind of the worth he is having. It means how much he is having the repaying capacity. That is a very important thing. That if we are when we are issuing credit, on the time we'll see that how much that he is having the capacity to repay this amount which we have issued in the form of the credit. So these are the 5 C's. They are very important. We'll discuss all the things one by one. First one is character. Then the second one is capacity. Then the third one is capital. How much capital the person or the institution is having. And then the common sense, and then the conditions. So all these 5 C's, they are the integral part of the credit worth to assess the credit worthiness potential of an individual or an organization. So that characteristics of a borrower and conditions of the loan attempting to estimate the chance of default. Because if we issue the credit to the organization or to the person, nowadays we will see that in recent past we have a few example of that Nirav Modi or like that. So that kind of, it means the bank has not, banks, the person, those who are administrating the bank, they have not assessed the worthiness of these people properly, and by mistake by mistake or because of the certain that personal benefit those they have received in the form of the corruption, they have issued the LOI. So that receipt, which is they don't have the worth of that kind, but they have issued the receipt of that thing, that they are having this kind of worth. On the basis of that, the financial transaction they have made in the other countries. So this kind of that thing is happen if the corrupt practice is being adopted. So credit worthiness is a very important thing, and we'll discuss this thing under these 5 C's. So first one, the correct. Someone called credit history. We'll see the balance sheet of a, we'll see the credit that the inflow, credit inflow. We'll see the financial outflow. What is actually in the business of that person. Either it's an organization or it's an individual person. We'll see the balance sheet. That generally the financial institute, they are asking the last 3 years that income tax returns. That what kind of that is there, because balance sheet is we know that the balance sheet is nothing. It is a assets and liability explanation on a particular day of an individual or an organization. So this balance sheet is explanation, self-explanatory. We'll see that what the firm or that person is doing since last 3 years. So on the basis of that, we can decide that the person is worthy or not. So sometimes called credit history, the first C refers to a borrower reputation to track record for repaying debt. This information appears on the borrower's credit reports, general generated by three major credit bureaus: Experian, Trans, Union, and Equifax. So first one, the credit reports contain detailed information about how much an applicant has borrowed in the past, and whether he had repaid his loan on time or not, because everything is there in the credit, that the balance sheet to whom we are calling. These reports also contain the information on collection accounts, judgments, licensing, bankruptcies, and they retain some information 7 years, because they are having that kind of that arrangement is over there. So the fair that is a corporation, FICO, issues this information on create a credit score, a tool lender use to get a quick snapshot of credit worthiness before looking to a credit report. So nowadays this is very clear that if you have a PAN number, so if you enter that PAN number, then you can have that entire information about that individual. So what actually the transaction, in what way he had done the transaction, whether he had taken the loan, it's okay, how, in what way he had paid, whether there is check bouncing or sometimes like that, this kind of that unfair means he had adopted. So everything is there, whether because in credit score there is everything, that the person is taking loan, but in what way he is repaying that loan. So that kind of that thing is available nowadays. So it's very easy for financial institutions to find out the corrupt people or the culprits, those who are trying to cheat the financial institution, and those who are interested in doing the fraud or like that. So these kind of people can easily identify. So character is a very important thing, because if the character is nowhere, then the person is not worthy. If he is having everything, but through the transaction we can have the financial institution can judge the characteristics of a person or individual or a firm. So on the basis of that, if the character is something wrong is there inside the characteristics of the firm, then they will not issue the credit, then they will not issue the loan. So these kind of information nowadays available online. So we can see that the financial institution can easily assess a person, those who are seeking the credit from that financial institution. Then the capacity. This is also very important, that how much the person or the firm is capable to repay the loan, to repay the the assets which he is carrying, which he is seeking on a certain conditions on interest. So that is very important. The capacity measure a borrower's ability to repay loan, comparing income against recurring debts, recurring debts, and assessing the borrower's debt to income DTI ratio. This is also the debt to income ratio, that how much he is earning in a month or in a year, and what in what way he has to pay, how much that already the loan he is having. So how much that ultimately means city to repay if he is seeking for another loan from any financial institution. So DTI score is very important. Debt to income score, it means debt versus income score, what how much that debt he is having, and what kind of so resource of earning he is having. So on the basis of that, they can say that if the still there is a limit to issue the credit, then only these financial institutions they issue the credit. If suppose if person is having 1 lakh rupee income, but he is paying 90,000 rupees as a debt, it means only the 10,000 rupees is the real income in his kitty right now. In that case, how much loan we can issue? That financial institution for that, because with that 10,000 rupees, he's running his entire livelihood. So in that case, the further loan can't be issued by the financial institution, because there are the people, those who are taking loan to repay the loan, they are once again taking the loan. So and to for repay that loan, they are further taking the loan. So that in that situation, the ultimately the financial institution, there is a transfer of money in between the financial institution only. The person is enjoying that facility because he had no income, but he is doing this thing like that. So to avoid that fraudness, that person is not having that kind of that income he is having in city. So in that case, the financial institution, they can refuse to give the credit to person. So that kind of that to avoid that kind of situation, the capacity of repayment is very much important, and the financial institution, they assess this thing. It means capacity of an individual borrower to repay the loan when they all fall due. It is largely depend upon the income obtained from the firm. C is equal to F by, where the C is capacity and Y is equal to income. So this is a clear cut that the formula to assess the capacity of the repayment capacity of the firm or individual who is seeking for the loan or the credit. Then capital. Lender also consider any capital that borrower puts towards a potential investment. A large contribution by the borrower decreases the chance of default. For example, borrower who have a down payment for a home typically find easier to get mortgage, mortgage. Even special mortgages designed to make home ownership accessible to more people, such as a loan guaranteed by the Federal Housing Authority (FHA) and the Veterans Administrative VA, require borrower to put between 2 to 3.5% down on their homes. Down payments indicate the borrower's level of seriousness, which can make lender more comfortable in extending credit. That capital is very important. How much he is having in his kitty? If the person is having land, person is having his building, person is having his that kind of the jewelry or like that, so he can easily that if the declaration is there in the balance sheet, that we can see that if he's possessing this kind of the capital with him, it's a fixed capital or sometimes the variable capital also. If he is having that much of thing in his kitty, it's a kind of that assessment can be made by the financial institution to issue the credit further to that particular individual or that particular organization. Then the common sense. This refers to the perfect understanding. This common sense is not like that generally in our general discussion we are talking. Right? This refers to the perfect understanding between the lender and the borrower in credit transaction. This is in fact prima facie requirement in obtaining credit by the borrower. It means that both have the commonalities, both have the common understanding that this loan, this credit was given for 5 years, 10 years on a certain price, and if all the conditions, if you will not pay the things on time, then we'll we raise such type of penalties, all the things of the conditions of the credit or loan, they are being over there, and both have the common understanding. Both have the creditor and the borrower both have the common understanding. On the basis of that, this characteristics of C is very important. So here the common sense is that both party, either it's a creditor or it's a borrower. It means the financial institution or the person or the firm, those who are obtaining or those who are taking credit, both have the common understanding on the conditions of the credit, conditions of the credit. Then fifth condition. This is very important. Fifth, this is last but not least, because the conditions of loan, such as its interest rate, amount of principal, influence the lender's desire to finance the borrower. Conditions refer to how a borrower intends to use the money. That we also see that in what way he want to utilize that money which the creditor is providing to him. For example, if a borrower applies for a car loan or a home loan, home improvement loan, a lender may be more likely to approve the loan those because of their specific purpose rather than a signature loan, or it could be used anything. It means there are certain periods, certain in agriculture we have this kind of that problem. People, in when we are issuing the loan to them, they are using this loan as a signature loan, because that's why the government, they had decided to impose certain conditions, that if the loan given through KCC, it was not supposed to use in some other reasons, because the farmers, if we are issuing loan to them on 3%, 4% at a very lucrative that interest rate, the loan was given for them to use in the agricultural operation, for purchasing agricultural input, either it's a seed, fertilizer, or so on, or sometimes to issue the that agricultural operational that requirement in the business of the agriculture. So that kind of that output, even in the output, if he is using that for purchasing the machines, agricultural implements, or like that. So that kind of that uses to be ensured by the agencies, those who are giving the credit, because it cannot be used as a signature loan. It means the farmers, those who are getting that loan, they cannot use that loan or that money for purchasing of their luxury item, or sometimes to performing the marriage ceremony, or sometimes to perform like that. It means the misuse of that loan, that loan can't be done, because this loan, a particular loan, that finance which is provided by the agency on a certain concept is in behind that. So this loan cannot be used as a signature loan. It means at the whims and because sometimes a home loan issued, it cannot be used, because the home loan sometimes issue, it cannot be used for other purpose, for purchasing of car. That's why the agency, they are timely observing and presenting the surveyor report through a neutral agency, that this person, whatever the loan is given, using for the same purpose. It means it's a conditional loan. We cannot use that kind of that loan for the purpose of other for addressing the other that issues those we are having in our kitty. So these are the few important things. They are very much important about the credit. So 5 C's of credit are, once again I'll try to explain those things, that the 5 C's are very important, because through this the only the way the creditors or the financial institution, they are assessing the worthiness, they are assessing the ability to pay, ability to repay, all these things they are assessing about the borrower, and on the basis of that, they finalize the amount of that credit which can be transmitted, which can be given to them on a certain condition. So these 5 C's are very important. So these 5 C's, once again I'll recap that: the characters first, the capacity, then the capital, then the conflict, common sense, and then the conditions. And the common sense, I have very clearly explained that it's a common understanding in between the terms and conditions of the credit. It means there is no difference, that if one is one if one sentence is there, it means the group of words both parties, they are having the same sense. So this that kind of that situation is there, to whom we are calling the common sense here in case of the credit. And the conditions I have already explained. The loan given for a certain cause, for a certain on certain conditions. If it cannot be used as a signature loan, it means it's not the wish of the individual or firm. They can use the money which is they have taken from the financial institution on a particular certain conditions. So they are bound to use to disburse that loan on those parameters, those they have claimed, while they have claimed to claim, and they have requested for the loan for the from the creditor. So these are the five C's. They are very important. Now, one of the most important thing which I would like to discuss here, that the six P's of planning. This is also very important. That I'll explain one by one. That purpose to increase the market share. What is the reason of planning? Planning means what? Planning means whatever we'll do in the future, we'll prepare a written document on that, and accordingly we'll proceed. It means when we prepare, enlist a project, a detailed report, a detailed the collection of all the activities of in the future, to whom we are calling the planning. If we are not planning, it means we automatically we are planning to fail. So this is the six P's of planning. We'll see over here, that why we are connecting both the things with credit. That is very important. That the purpose to increase the market share. When we are in business, what we plan that how much we can have opportunity to grow in the market with the product range which we are having, or with the services those we are providing. How much we can enhance the services more in the field, or the product range in the field. For that purpose, if we want credit, then we have to have that, prepare a perfect planning, that in what way we will proceed in future. Then the philosophy of quality and consumer satisfaction. This is also very important. That philosophy of the second P is very important. The philosophy of quality and consumer satisfaction. This is if the organization, those who are providing services, or either they are producing any product, if they have that kind of the quality and consumer satisfaction, that main in their main planning, then this is a perfection. They are marching towards the perfection of the business. Then the premises assessment of strength and weakness. Yeah, that SWOT analysis is very important. It means the premises assessment of strength and weakness to face the challenges in environment. This is also very important. That if we have that strength of the organization, opportunities, the weaknesses, the area of improvement, and the threats, those there are possible threats in the. If we explain all the things in planning, then it will be very easy for us to. If we go to any creditor, they consider all the things, and when they will match all the things with the balance sheets, with or ITRs, or the worthiness, the parameters those they are having with them. So it will be very easy for us to obtain the credit which we want. Then the policies, production, marketing, finance, accounting policies, those are the clear picture about. They are giving the clear picture of the business of any organization, or any individual also, if he is seeking for the credit. If he is having what is the policy of production, that in what way they are producing, what kind of that from where they are arranging their raw material, what kind of that conditions are there, whether they can run this system for the plan they have decided. It means if we want to produce X number of unit of any product, whether we have the capacity to cater the stock of raw material for producing that product or that service up to X level. So these all things, they are very much important in planning. Then the marketing, in what way will have that consumer satisfaction of that particular product or service. That is the part of the marketing. Then the finance, that in what way we'll plan, that how we'll purchase, how much that the financial issues raised, in what way we'll have a marketing team, in what way the sales accounts, everything they work. This is very important. Then the account policies also, that how much will that clarity we have to have, that accounts, we have to maintain the proper account, in what segment, in what we'll go to allocate our resources, in what way we'll resource, and whether we are obtaining all the things on time or not. So that all kind of things will have an explanation through the accounts. Then the plan, objective, and action plans. They all are the part of that planning. We are that what kind of strategy we are having, what kind of practice we are using, what are the objectives for that we are, because the objectives are nothing. They are steps towards the final destination. That the goal and the vision and the mission which we have decided in the planning, in the headline of the planning. Then the priorities, prioritize the scarce resources. Yes, it's a general phenomena that we have every time. We in mostly we have more that priorities, more requirement, but we have a limited resources every time. So in what way we prioritize our resources? That the if for example, I'll take one good example that we'll see that through the balance sheet that in what way the institution is working. They are not giving regular increment to their employee, but they are hiring, they are purchasing so many luxury items for their personal use. So this can be assessed through the balance sheet that what kind of that attitude this kind of management is having. If they are not motivating their stakeholders, then how they can even think about the goals and the objectives those they have decided. So this kind of the thing easily can be understood by the financial institution, those who are providing the credit, that what kind of mindset these people they are having. So on the basis of that, they can further issue the credit to that particular organization or to that particular person. So today I have discussed so many good things. That first I have discussed regarding the credit, that what is the meaning of credit. Credit means it's a credo, it's a Latin word actually. It means it's a combination of four words, or that the belief, faith, confidence, and trust. It means when all together they are there, to whom we are calling the credo, and that is means the belief, faith, confidence, and trust. Credit or loan is a certain amount of money that we know that provided for certain purpose on certain conditions with some interest which can be repaid soon or later as per the conditions those who are decided. On the basis of that, we have a definition of that Galbraith, that credit is temporary transfer of assets that from someone those who are having and to whom those who are not having on a certain period of time on a certain conditions. So that kind of that things generally it can be done by the financial institutions, and they assess the worthiness of any borrower on the basis of that five C's. They are very important. That characteristics of the person, then the capacity of the person, then our firm, and then the capital, that how much that he is having in his kitty, on the basis of the capital that he is having, either the fixed capital or the variable capital. All the things can be observed through the balance sheet which they are having. Then the common sense, which is here in the case of the credit, it's common understanding that whatever is there in the credit transaction, both have the same understanding, creditor and borrower. That's why they sign the agreement. On the basis of that, they have the common understanding on the credit conditions. On Because if the loan is given for a certain purpose, it cannot be used as a signature loan. He cannot misuse that credit for his personal whims and wishes, because that loan was given. If suppose the home loan was issued, he cannot use that home loan for buying car, because there is a certain that differences is there. The home loan given for providing the better shelter to the human being, and that's why there is a comparatively lower interest rate, because the government or then the agency, they decide that the person is now he is seeking for the shelter, but the car is luxury. So that loan which is given in the section of the home loan, that money cannot be utilized for purchasing of car or purchasing of AC or like that. It means it cannot be utilized as a signature loan. This is also very important while we are discussing about the credit. Then the conditions, they are also very important, that for a certain period of time, that how much interest rate will be there, if because of any reason, because of any financial problem or financial issue raised by the creditor or debtor, that can be mentioned over in the conditions, that if because of any check bouncing or because of any reason delayed in the repayment, then what kind of penalty to be imposed by the creditor on borrower. These all are the things those who are very much clearly mentioned in the in the form of the condition of a loan. So that is why the fifth C is very important. So these are the combination of five C's, and we have discussed all the things in detail. And now we have discussed that six P's of planning, and what is the relationship in between the planning and the it's how we can increase the worthiness of the borrowers if we have a perfect planning. So these six P of planning, they are purpose, then the philosophy, then the premise, then the policies, then the plans, then the priorities. These all are very important. While if a organization or an individual, if they are taking for loan, they have to have this kind of that the mindset that they have to prioritize all the things in the form of the planning, and they have to mention very clearly that in what way actually they want to proceed when they'll have a when they'll have a, this financial that assistance which they are taking for that. So if there are any question, you please ask through the mail. Or now I think I have completed my assignment of discussion on credit and the five C's of credit, and then finally I have concluded the six P's of planning. They are very important, and I have also coordinated both the things as in as many as in a decent way that I have explained. So thank you very much for joining me.